Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks for listening, by the way. We're on each and every week. We've got a number of different stations. A new one out there in Las Vegas, Nevada. I want to say hi to all those people, Danny Jackson and the people at 1400. What are the call letters?
KSHP.
KSHP.
Like K-Shop.
K-Shop. Very good. And actually, I've asked Danny to see if he could round up a TV station, too. We're trying to resurrect the Las Vegas real estate show. And we hope to do. We'll probably get a couple of shows in the can before we find a station. Anyway, leave us a review when you go to these places for the Mortgage Podcast. Reason is it helps everybody find the show. More people who give reviews pushes me up in the search engines, and that's a good thing. We're also on YouTube. Our YouTube channel is Jeff Barton, the Mortgage Voice. And you can see us there each and every week. This particular show, last week's show, if you go to YouTube, sign up, be a member, and click on the little bell that alerts you to each week's new show. And that is no exception this week. Be a great show. We have a great lineup today. Check us out also on the website, www.themortgagevoice.com. So we're talking, and last week we were talking about Barbara Cochran?
Yes, it was.
Okay, so Barbara Cochran, the postscript. You want to run down the postscript a little bit for us, Daryl?
Well, I mean, first of all, she's a very savvy businesswoman, obviously.
Absolutely. Anybody that sees Shark Tank knows who she is.
That's
exactly.
Right. And she, not personally, but her business support got scammed out of like almost $400,000.
Right.
Because they had mimicked some
internal email or some such.
Yeah, and in the end, the money was transferred, the button was pushed, but today it's come out that they were able to somehow freeze it before it got to its ultimate destination, and so all's okay, and she's happy about that, but still sad in the fact that people can infiltrate people's organizations and make them do stuff that is inappropriate. Right,
so all of this is very similar to what we do in the loan business. In the loan business, let's say you're doing $100-200 million a year at a small company, right?
It was her real estate company.
It was her real estate company, that's right. And the escrow department in all of this is responsible for sending wires, escrow or title. In a lot of places other than Southern California, anybody who's listening to this will know, in Northern California, in Las Vegas, in a lot of places, the title company is the escrow company. So these people are in charge of wiring huge sums of money to places either to pay off a loan or to buy real estate or, in any other way that you're going to use refis. There's so much money changed hands on a yearly basis. I think last year the loan volume in the U.S. was about $1.5 trillion. Now that's a lot of money, okay? So how do these companies get infiltrated? What happens when someone receives a wire request for paying off a loan or buying a piece of real estate? And the verification processes that happen within this, and it's very loose. It's a lot looser than you think it is. So about 1.5 years, 2 years ago, there was so much of this fraud going on, i.e. someone would request a wire on a property, a real transaction, and how they knew about that or those transactions, we don't know, but it can't be that hard to figure it out. Or an internal email address at the company that's requesting looks exactly like the email address that actually is from the company that's requesting. So it happens so much that most escrow companies need verbal authorization prior to any release of funds, and that would be in addition to the wire requests that usually come over. Now, large banks, whether it's Chase or what's another large bank? Bank of America, Wells Fargo.
Yeah, Citibank.
Yeah, Citibank, the big five. All of these particular banks have their own internal processes in order to prevent fraud. But Barbara Cochran, again, very savvy real estate agent, a very savvy real estate office, broker, Obviously, she's been in the business for 100 years. She's on Shark Tank, for gosh sakes. She gets, what do they call it, catfished? Is that what they call it?
That's what they call it.
That's what they call it, when somebody who you think is real is not real. Now, the most famous case of catfishing for me was when, what was that football player that got, that somebody who he was girlfriends with, had never met, but was the New Jersey, some guy in the basement of New Jersey it wasn't Tyrone Matthew, was it? The honey badger? It was somebody, anyway, it wasn't Tebow, it wasn't anybody like that. Anyway, this happens. Why we bring up all these stories is to...
They were engaged.
They were engaged, right? And
Yeah.
it was like some huge national championship game that came out that this person was the victim of catfishing. Now, granted, that had no real repercussions, but obviously someone like Barbara Cochran, who has alleged to have gotten the money back, I'm glad for her. It also happened to a friend of mine. Same darn thing about wiring funds. The funds were in the Far East, and they did get the money back. So I guess it's possible, so I can't really say that story is a fake story, the one with Barbara Cochran getting the $400,000 back. But for you, you're in the market. And right now, and we're going to talk about this too, there are so many indications that the economy is doing well. And yet, at the same time, oh yeah, Manti Te'o, that's right, that's who it was. Good job. Yeah, Daryl just pulled that up on the internet. Yep, that's who the guy was. But so, getting into the rates and what makes a great purchase is the affordability that you have. How many people are out there who can refinance, who would be available to saving hundreds of dollars a month on their mortgage? And then that amount of money, coupled with the, I guess, huge volume in the mortgage industry, makes susceptible all of us to identity theft, fraud via faulty transactions, either through an email or some kind of phone call. We've all been scammed by the Social Security people who call, or the gas or electric company that's going to shut off your electric right now unless you call up and give them your credit card. Don't do it. I don't care what's happening out there. It's your money, and there are no financial crimes police force out there that's going to swoop in and arrest people. It's just not going to happen.
They say the IRS will never call you.
Never.
Ever.
No, they send you a letter in the mail, or the local people send you. The police, they show up at your door. Nobody is calling on the phone. These are one call closes, and they want to close on your money. So again, we stress and reiterate, especially now when we've had a rate cut, and I want to talk about that rate cut of a 0.5 point by the Fed and what that means to mortgage interest rates, and how the Fed's, 0.5 point cut really caused the 1,200 point jump in Monday's stock market. Everybody is familiar with that by now, but we've seen such swings in the market that it's very difficult to follow day to day, especially if, most of my listening audience, the only way you're invested in the stock market is through a 401k, or something akin to a group investment pool. And there are a lot of them out there. A REIT is a group investment pool. That's a real estate investment trust. You may be involved with that. But as far as buying and selling and trading on a daily basis, stocks to watch the market go up and down, most people in this listening audience do not do that. If you are doing it, you are buying a fund. You are buying some kind of index fund which houses hundreds of stocks in it, or dozens of stocks in it. And that volatility is very rarely as large as you would see in the Dow Jones. So be careful about your money, who you give the information of how to get your money, where you send your money, and make sure you're verbally preparing yourself and others for the transaction so that you can watch it. Also, again, the rates are smoking. The Fed rate cut, which happened this week, is an amazing thing, but it's tempered. And let's see what else we got here. I have a couple other things. Oh, yeah, all the different people that can be helped in this refi market. It's a big number. We'll get to it very shortly. Anyway, thanks for listening. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your host for The Mortgage Voice. Thanks for listening. Hey, check out the Mortgage Voice podcast on Apple Podcasts and Google Music Play, or wherever fine podcasts are heard. Subscribe for free, never miss an episode. And please leave us a review. It helps other people find the show. We're also on YouTube at Jeff Barton, the Mortgage Voice. Subscribe to the channel. Click on the bell to get notified wherever a new episode is available. And check us out on our website, www.themortgagevoice.com. We're on 3 great radio stations. Please don't ask me to repeat what they are, because, quite frankly, I screwed it up the last time so badly. I will just say they are terrific people. We're on 4 different stations in 2 different states, new to Las Vegas, Nevada. And again, thanks for listening to the show. With us once again from California is Olivier Becerra. Olivier is a fine and terrific loan officer. Did you like that? Thank you very much. Olivier, how are you?
Good. How are you doing, Jeff?
You know, I'm good. Actually, we wrote the opening, and so I'm still trying to get through it. So apologize for that stumble if I had one. Okay, rates are unbelievable. You must be getting overwhelmed with the amount of calls for refis. Tell us about what's happening in your business.
Well, I can honestly say I've been doing this 19 years, and this is probably the busiest I've been. This whole year has just been incredible. It's just been relentless, actually. So, but no complaints. Been working a lot. I think I'm getting more gray hair, but it's all worth it.
Well, my wife dyes hers, so I can't even tell you she has any, and I have plenty, believe me. Let me ask you a little bit, too, about when you're sourcing loans, when you're trying to figure the best product for your client. Are you seeing more in terms of the non-QM product, or are you still seeing that there are a great deal of, I guess, desire to get into the Fannie and Freddie products?
You know, honestly, when it drops this far, you see a lot of the influx of FHA Streamline. So everybody who has the FHA Streamline can drop at least half a point with no cost, no appraisal, no income, no nothing. You know, as long as they're paying the mortgage on time, they don't have to show anything, and they get a fantastic. I just did one right now and saved my client a little over $400 a month, and got her 2 months with no payment, so she gets a break. You know, in making a payment, she'll use the 2 months to remodel her bathroom, and she got, you know, a nice drop in her mortgage. So, and that and the trade too, because the not, you know, those portfolio products are actually like so low. I mean, you can do a profit and loss program for, you know, 4.99, you know, without showing, you know, for all the business owners and, you know, self-employed.
That's a very good rate, 4.99 for that. I mean, if you're getting something, I mean, I'm just thinking about historically what you would have to have paid to get into a loan like that if it was available.
I don't think I've ever seen it that low
at
that rate, even on a DSCR, which is a debt service. You know, the property just qualifies strictly on the rent. So if, you know, your payment is $2,000 and your rent you're getting our $2,000, then you qualify. You don't have to show anything. You don't have to list income. And I think I just did one at 4.625 on that. So there's great programs out there right now. Just phenomenal.
It's amazing. About 18 months ago, maybe a little less, we were talking about conventional rates at going to 4.5%, and now we're talking under 3%. It's really
I mean, it's incredible. I've never seen them this low, to tell you the truth. And I'm just doing an FHA at 2.75 on a 30-year fix.
I know. I saw those rates today.
That would normally be 15, maybe.
Right. That's right.
For 15.
And I'm not only a skeptical person, I'm a worrier. Although I don't see on the horizon any sort of issues that would come up to haunt, because most of these borrowers, or all of these borrowers, have pretty good FICO score. They income qualify, or the property income qualified, and there's money in the deal. So, I mean, most of it, I'm just like, okay, this is doing all right. And because of the same, I guess, when you look at property values and the rise, whether it's, back in '08, they were rising at 10% a month. Well, we're not even seeing 3.5% a year, which is very sustainable.
Oh, yes, absolutely. It's a good time to refinance, definitely. I mean, even if you just bought the house 6 months ago, just like the one I'm doing right now, I told you the FHA Streamline, she bought the house 6 months, actually there were 2 units. She bought them 6 months ago. On FHA Streamline, you just have to make 6 payments, and you're good to go on your Streamline. It's that easy. So, I can't even say if you have an FHA loan, you should contact Malibu. Say contact your lender, but contact Malibu, and it's just amazing the savings that you can make.
What do you see
Streamline
in the future for our business? There's so much been said about whether the CFPB is going to remain or whether it's going to go away because of the Supreme Court case that was heard. We don't know about regulatory efforts here in California to, I guess, create their own CFPB. Regulation in general is always something that slows down, but because of the rates and the demand is so high, where do you see it heading? Do you have a crystal ball a little bit?
Well, if you look at the economy and how it's going right now, like today, they cut, the Fed just cut the rate again today.
The short-term interest rates, right. Half a point.
Internationally, we have to, in order to stay competitive with the other countries, we have to keep it low, or else, we'll start going elsewhere for our financing. So being smart that we are, we did cut it today. So I see it staying this way for a while, and especially in election year. You and I know this. If you've been doing this a while, every 4 years we have a boom.
Right.
So we're
That's true.
it for right now. Everybody's smart, take advantage of it.
Yeah, I think the volatility in the political world is really offset by the fact that we've got very stable rates, and they've been that way for over a year, very low. Actually, they've been low for 10 years. Let's face it. Anything below even 4.5%, where they were headed in 18. No, it's been really since 2010, 11. That's when rates really started to go down, and it's been really steady. So I appreciate that, even though, as I said, political volatility would suggest otherwise.
Yes, absolutely. No, unless something drastic happens, that it's been steady, and even when it creeps up, it's been very minimal, up and down. It's been nothing drastic. And even if it was to shoot up, let's say 6%, we're still spoiled. We just want to be spoiled more.
Well, it's the Walmart effect, right? When Walmart came in and started selling things so cheap, you just got rid of the local store. Same thing with the mortgage rates. I mean, you'd be an idiot not to get in on it right now. What do you want to do?
I know. I remember I had a like 9% back, I want to say 20 years ago, and happy to get that. I
was happy at 8.75, my first mortgage. Yep, I agree. And it was a big mortgage, and I was struggling. I borrowed money to get into the property. Yeah, that was, I guess, like a lot of people are today as well. Okay, so let's talk a little bit about the corona effect. What is happening in your child's school, in your local neighborhood? How are people reacting to it? Do you think it's going to chill the real estate market at all?
I haven't seen it. It's affecting a different market. It's not affecting us. It's affecting the, export, import. I have friends who work at the docks. They laid off 60 people this last week.
Yep.
Yeah, but, and again, she was one of the reasons I was talking about. So for people there, it'd be a great thing to do a streamline because they don't ask for income.
Right.
But, it's my dad goes to a 71% Asian school where, a lot of the kids are walking around every day with masks. So, I don't see it affecting us. If anything, people are looking to finance to maybe, in case it's going to affect their industry, they're going to want to take some money out just in case to put it in the bank.
Oh, that's a good point, and I think good strategy, too. Could you tell people how to get in touch with you and if they need a terrific loan officer?
Oh, sure. My phone number is 626 area code 712 9920.
Okay, excellent. Liver, thanks very much for coming on the show once again. I always appreciate it. It's a straightforward, good talk about what's out there in the marketplace. Thanks very much.
Thanks, Jeff.
Okay.
Nice talking to you.
Nice talking to you as well. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Thanks for listening, everybody. I am Jeff Barton, your voice in the mortgage industry. If you want to hear us each and every week, go to all the radio stations, the terrific radio stations that are on both here in California and obviously in Nevada. We're new in Nevada, 1400 AM Saturday at 1 o'clock. So thanks very much again. We are on all kinds of podcasts. We're on Google Podcasts. We're on Apple Podcasts. We're on probably the big A. What are some of the other ones? It's Spreaker. Yeah. Okay. So
iTunes.
If you are a listener of podcasts, you can catch The Mortgage Voice in all these great places. Subscribe for free. Never miss an episode. Please leave a review. It gets other people to me faster. Also, we're on the YouTube channel, Jeff Barton, The Mortgage Voice. We have a lot of people that see the show. We have hundreds of shows on there each and every week. You can see me, see the guests. If you do hear something that you like, make a comment. We'd love to hear from you. We like feedback. We also have our own, www.themortgagevoice.com is our website. Please check us out. We brought back a terrific guest from Remen. Last week we had one of his co-workers. Now we're bringing the man himself, Dean Garrett, who has been with the company and in the lending industry for a long time. And I just wanted to introduce him that way because he's the expert. Dean, thanks for coming on the show.
The expert, you got the pressure on me now.
I know.
That.
I'm sorry about that. I don't know. I just ran out of things to say, so I figured expert's better than, saying something not true.
That means I'm old. I've been in the industry a long time.
Yes, it does. Okay. Real Estate Mortgage Network, REMN, we've been with you guys for a long time, and we appreciate the products you bring to the marketplace. Give us a little bit of a rundown of what you do offer that may be a little different than some other lenders out there.
Well, our top program that we are the top lender in the nation when it comes to our renovation programs. I know Sandra said she touched on that a little bit with you last week, but renovation, we do more of those loans than anybody in the country right now. We actually, and it makes it very easy, we have a person that's all they do. So if any of the LOs have any questions, they're right there. They can talk to this person. He tells them exactly what to do.
Oh, okay.
As AEs, we love it. It makes it real easy on us. We turn it over to, our expert there. So that is one of the areas. But what we've been doing right now that we've got record submissions going on right now is all our government purchases. If you've got a government purchase with a 680 FICO or better, our rates are probably top 3 in the country right now.
Oh, that's saying something with the rates the way they are.
Yeah. To give you an idea of one, I priced one out the other day. We were at 2.75, and there was still 2.5 rebate.
Wow, that's big. For people who don't understand what a rebate is, that means if you have a mortgage broker that's working with you, that money that's called rebate can be applied to a credit for the borrower. Is that correct?
Correct. You are correct.
Well, which is a big deal. You're getting a smoking rate, and you're getting something to help you out with your closing costs too.
Exactly. That's been the renovation, our government purchase. We call them our platinum product. And then we also have some of the non-QM. The bank statements,
sure.
The investor cash flow program on non-owner occupied properties. I'm not sure if you're real familiar with that one.
Tell us about it.
That one's a great program too. All you do is you add up the rent on the property. If the rent's higher than the PITI, you've got a deal. And
PIT is principal, interest, taxes, and insurance. For those of you who don't know what that is, those are the things you have to pay each and every month to maintain, obviously, the property and keep the mortgage.
Exactly. So what you've got coming in is higher than what you've got going out.
Right.
And the credit score, and then obviously we're going to be a little more limited on our loan to values. We can go up to, 85% in some cases. you have a property, if your tax returns aren't done, and you want a simple way to qualify, this program can get you cash out too.
Now, when you're doing a purchase on something like that, do you have to have a tenant ready to go, or is this just an average of, let's say, what rents are in the neighborhood?
Exactly.
Okay.
The appraiser can give us the rent survey and tell us what the rents are in the neighborhood.
Okay, now, and for people who don't know, they do some occupancy checks on these things too after the loan closes, right? To make sure that you're renting it out as opposed to just trying to get the lowest rate possible through a non.
Yeah,
generally,
exactly.
Right.
If you are moving or plan to be moving, you do have to. This program obviously is for rental, so it's
Right.
a non-owner on this program.
That's right.
So any of the other programs, yes, there would be a check done on it.
What do you think is happening with the mortgage interest rate, and why is it so low? I always ask this of account executives. It just baffles me how we got to where we are today, when really no major incidents or no major stimulus is needed in the economy. The economy's been doing great, but the Fed cut by 0.5 point in order to stimulate or keep member banks, I guess, happy because the coronavirus is killing their deposit rate or something. It's baffling to me sometimes.
Jeff, that's funny. I was talking to a friend of mine who's in the secondary market area.
Right.
And we were saying the same thing. How do we get to this?
Right, exactly.
He feels like they've almost jumped the gun with rates, that there wasn't anything major that happened to cause us, to lower the rate. So, as a loan officer, we're just smiling and writing it up right now. But
well, of course,
that's a great question.
I look at the way it is and how it has been, and I always say, okay, if we're doing well, and if we're raising rates, that means the economy is doing pretty well. It hurts business, yes, but in the long run, it gives us a place to go if the economy falters. Well, where are you going to go from 2.75%? You have to have a margin and an index built into the loan, or else nobody makes money. And who wants to be in a business where nobody makes money?
You can't.
You can't be.
Like
the whole business would implode if it got much lower. That's my own feeling, anyway. I think
what we're doing is we're making it up with volume.
I see.
So maybe it's a little per deal, but you can make a little bit more in the long run. So that's how. And you have to have lower rates, or you're going to get run over anyways right now. So.
You are, because there's so much competition from all sectors of the economy right now. The only thing I can say is that we just don't have enough product out there in terms of purchase, especially new homes, to satisfy the demand. I mean, the demand here in Southern California is so huge that we lost, 500,000 people went to a different state last year because, one, they couldn't afford it, and two, there wasn't anything to buy.
I agree with you totally. I see that. I'm down here in, Southern Orange County right now. And
right.
It's the same thing. And if there is a few houses, it's the, multi-million-dollar one.
Right.
So it's really tough. So you being in Nevada, I think is a really good move for you guys. I think, we know that's where a lot of the Californians move to anyway.
Yep, that's true. They sell here, go there, buy cash, and put $500,000 in the bank. Yeah, that's what they do.
Exactly.
It's amazing.
That's the thing. Yeah, everybody here wants to sell their house, but unless you leave in the state, you're going to run into the same thing buying the new house.
Right.
So.
And I bought my house, during a recession of 91. And so you can imagine how cheap it was in those days, which it is. And the house has improved in value, 3-4 times. It went down in value after 08 and in 09. But since then, man, it's like a rocket ship. And we're very happy. We're hoping that it stays that way. But at the same time, we know that anybody getting out of college, they can't afford this. What are you doing in order to help the first-time home buyer, somebody? Do you guys have a plan or a way by which you can help those kind of people too?
A lot of it, is the FHA loan, which is just the 2.5% down, and that can be a gift.
I see. Right.
That's an easy way for first-time buyers to get in, and the rates are, they're reasonable on that too.
Right.
What I told you with our Platinum product, that's designed for your A credit people on a purchase. So, to me, that is the smartest and easy way to get in if you don't have, say, your 20% to put down. So it gets you in the house,
right?
Gets you to build a little equity, and then once, you get up to that 80% equity, then just refinance and you can get rid of the mortgage insurance. So
yeah, I think that's good.
It gets you in.
It does get you in. And also, how you quickly, we got about 20 seconds left, how are you dealing with the student debt? in a situation whereby somebody gets out, they get a good job, but they have a lot of student debt. Are you guys overlooking that, or are you putting it on some other scale when you're doing income values?
When we're doing the ratios, the bills, we are including it right now. There's talk of changing that now, but it is at a lower percentage.
Okay, they are about to change it. That's what I thought. Yeah.
Yeah.
Okay.
Yeah, that's going to be the next step.
Could you shout out your phone number in case somebody wants to get a hold of you about some of these great products? That'd be great.
Absolutely. It's area code 949-357-6444.
Dean, thank you very much for coming on the show. I really do appreciate it, and we'll do it again soon.
Thanks, Jeff. Appreciate it.
Thank you. Thank you, too. That's Dean Garrett from Remen, R-E-M-N. I'm Jeff Barton from The Mortgage Voice, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I am Jeff Barton, your host for The Mortgage Voice. Thanks for listening. Thanks for tuning in each and every week. I really appreciate it, and we try to get you some really timely and current information about what is happening in the mortgage industry and how you might be able to take advantage of it. Check out the podcast that we're on. We're on Apple Podcasts, Google Music Play, wherever fine podcasts are heard. Subscribe for free. Never miss an episode. And please leave us a review, will you? It'd be great. It helps others find the show, and it really pushes us up in the search engines. Also, we are on YouTube. Jeff Barton, The Mortgage Voice. Subscribe to the channel. Click on the bell to get notified whenever a new episode is available, and check us out on our website, www.themortgagevoice.com. Again, I'm Jeff Barton. Thanks for listening to the show. Welcome back once again, Jennifer Conrad, who is going to walk us through what's happening this spring or almost spring in a very, very competitive but busy and low interest rate environment. Jennifer, how are you?
I'm doing well, Jeff. Thank you so much for having me back.
Thank you very much for coming on the show. Okay, we have got unbelievably super low interest rates. First, how is this affecting your business?
I'm busy right now.
Yeah, I guess so. Right. Everybody's busy. You got it.
Yeah. FHA rates are in the mid-threes, and the conventionals are right at about 4.25, somewhere in there.
Okay, very good. And in terms of the programs that you're offering, some of the programs that you're able to offer to people, what do you think are the most popular, and what do you think are good for first-time home buyers?
Actually, we do have quite a few different programs. We have the conventional 30-year fixed. That's usually for our borrowers who have a little bit higher credit score. It's obviously going to be better as far as the rate if they have more to put down, but we can do a 5% down loan with that. Again, like I said, if their credit score is at least a 720 or higher, then that might be a good program. And then we have the FHA, where the rates, like I said, are mid-threes, and that's 3.5% down. It does have monthly MI, and we can go down to a 580 credit score. With a 580, it's going to be 10% down.
Okay.
But with a 620, we can definitely do 3.5% down. And then we do have programs for investors as well if they're looking to purchase, and some of them are more or less documentation. And that is going to be more down payment. It can be up to 30% down. But we're talking about being able to close those loans in as little as about 3 weeks.
Do you think, being an election year and also because of the public health crisis out there, that it's going to slow down the real estate market, or do you think it's even going to be noticed?
What I've always been told is that when we're approaching an election, actually things end up getting a little bit busier. Rates actually get a lot better during that time. So
right.
I don't know. I just know that right now, I would say, especially over the past month and a half, it seems like things have gotten a lot busier than in the past. And I do think that it does contribute to the fact that the rates are much lower. But I also think it has a lot to do with the fact that some of the lenders have relaxed standards just a little bit, or I should say their guidelines a little bit.
Okay.
So they're allowing more, not necessarily stated income loans like we were used to seeing, where you're putting no money down or 5% down. I mean, again, like I said, it's 30% down, 40% down, but
at least there's an option to be able to do stated income if we're dealing with people who have a high credit score, or even if we have people who are foreign nationals and they don't have a credit score at all in the U.S., but are established in another country and can provide us documentation to support that.
You know, you are in a unique position at Malibu Funding, and I'll tell you why. You have clients, and also you work with loan officers who are in several different areas of the country, whether it be in the Southeast in Florida, whether it be in the Midwest up in Illinois, certainly here in California, Nevada, Arizona, some of these other states. Give us your idea, your overall view of borrowers out there. What are you seeing as a general FICO score? What are you seeing as problems that maybe they all possess, or maybe specifically to an area? Give us your idea, because I think your ability to see loans from a lot of different places gives you a unique perspective.
I would say that most people now seem to be more interested in trying to improve their credit. Student loans seems to be an Achilles heel for a lot of people, whether,
Right.
in the past they didn't understand that it was important to make those payments on time.
Right.
So I'm seeing people trying to consolidate and get back on track with the payments for those. People are understanding even if it's a situation where we have to kind of coach them and let them know this is what you might want to do in order to prepare yourself, so that 6 months from now you can purchase. They're trying to get balances down on credit cards.
Right.
We're addressing, in some cases where, people have dealt with times in the past where they were unemployed or their work was less, and so things like car notes got behind or repossessed. And so we're talking to them about addressing these things and trying to settle with these to clear up their credit to put them in a situation to be able to purchase. And I would say, honestly, it's kind of the same thing across the board. I mean, we're doing some loans in Virginia, Illinois, Florida, here obviously in California, Nevada. It's pretty much the same thing. Just, trying to work with people to get those particular areas straightened out. So I think it's probably across the board that some people don't realize that certain things, like I said, the student loans,
Right.
Are important. It's important to take care of those. And also understanding that if they are going to defer those student loans, that it doesn't mean that all of a sudden they can qualify without a payment. I still have to take 1% of that loan balance and put it into what they owe each month, so that ultimately can affect how much they can afford to buy overall.
Do you think they're going to solve this student debt issue? Because I've heard that from a number of different people who would like to get in, but they are so saddled with the debt. Now, granted, okay, it's your responsibility. You went to college. You got a fine arts degree, which is going to net you 0 job opportunities. No, I understand they have responsibility. You know that's what happens.
All right, Jeff, I have a fine arts degree.
Oh, sorry. I mean, present company excluded. I'm so sorry. No, but you know what I'm saying here. That if we can't solve the student debt, which is about $1.5 trillion of debt that is really around like an albatross around somebody's neck trying to get a loan. What are some of the solutions we're coming up with today? Is what? Deferred payment? But you said that there was a 1% add-on in terms of what they had to effectively use as a benchmark for what they have to pay in the future. How are we going to solve this?
The one thing that is sort of a loophole around that is that if a borrower looks to get an income-driven payment, which is based upon how much they make, and then they make that payment, and it is reflected on the credit bureau report, then I can use that payment in lieu of 1% of the balance.
I see
so
what you're saying.
So we can do that.
But the payment has to be, right, has to be made.
I mean, but that's a win-win because it's the payment is based upon what they make each year, so the student loan collector is getting paid, as well as more than likely they're going to come out with less of a payment than the 1% that I'd have to hit them with.
Do you think using a company, a refinance of your student debt is a good idea for some of these loans?
I guess it would really depend on what the rate is
right.
That they're offering, what the ultimate payment is going to be. So, I mean, I would imagine that is a case-by-case basis. And I suppose if a person is in a situation where, they've defaulted and this is going to give them an opportunity to get back on track, then, it would be to their advantage.
Yeah, I think so too. Jennifer, shout out your phone number for somebody who wants a terrific loan officer, somebody to help them walk through all of the complexities of getting a loan, either purchase or refi.
My number is 773-593-6831, or they can call me at the office, 818-719-9901.
Okay, one last question. I know your son is sitting there diligently listening to our conversation and writing down all the notes. How are they handling the virus in public and private schools? What's happening out there in the world with it?
Well, he goes to a private school, and
Right.
they did say that there were no cases at this time, but obviously, if we run into a situation like that, we might be in a situation where kids would, have to stay home. But
Right.
CNN kind of said the same thing. We might have some social isolation. So as of right now, like I said, my son feels like, hey, the flu is worse than coronavirus, so we wash our hands a lot. We
Right.
hand sanitizer and wipes, so it's not that much of a concern as of right now.
Great. Jennifer, thanks for coming on the show once again. Really appreciate it.
Thank you so much, Jeff.
Thank you, too. That's Jennifer Conrad from Malibu Funding. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thank you for listening. KCAA, KCHP. Is that right?
Yeah, it is.
KCHP out in Las Vegas, 1400. SHP.
Yeah, you were close.
I don't know why I keep butchering this thing. I got to go back to school and learn something.
K-Shop.
K-Shop. Okay,
Yeah.
Excellent station. We're on 1400 out in Vegas, Saturday at 1 o'clock. I listened to it last week. Great. We're, of course, on K-Tahoe and
KMET.
which one?
KMET.
Thank you, KME.
Banning, California.
In Banning, California, yes. You know what? You know what the problem is? There's too many now.
Oh, yeah.
I can't, there's all four of them, and I
Oh,
can't
yeah.
remember any of them.
Oh, about so many stations, they just can't. They sound like Rush. About
man.
the burden.
You know what's an amazing thing? And anybody who does this kind of work really for a living, I don't do it for a living. I do it as an advertising vehicle for what we do at Malibu Funding, and I want to thank them for sponsoring the show. But any of these people who are individuals who got on the radio, who built a following, and I don't really care what they're saying or how they're saying it, it's amazing how they can cobble together 100, 200, 300 stations. And the power that has, I mean, Rush Limbaugh is a perfect example of really, a guy with an opinion who all of a sudden really influenced the political landscape of the United States for the last 20 years. It's unbelievable. Really, it truly is.
There are people that use that as a reference. How do you know that's true? Because Rush said so.
Right, exactly right. And whether you're Howard Stern and there are a lot of national radio shows, radio programs, and for those of you who think that radio isn't the medium, well, it is, because in Southern California, when you're driving around, and most of us, we're driving around a lot. We're in the car a lot, and we're listening to the radio, or we're listening to some podcast. This is what you're listening to, talk radio, especially over a certain age when you just can't listen to lousy music anymore and you want to hear some great opinions. This is a terrific year in terms of being able to get real things going on the radio. You've got the elections. You've got the worldwide public health crisis, which is the coronavirus. And by the way, it has really affected the mortgage market. It has really affected the overall economy, and that's one of the reasons why the Fed dropped the discount lending rate by 0.5 point. Now, what does that mean for you who wants to get a mortgage? Let's talk about that for a second. There's an article, of course, Matthew Graham over at our favorite website, the Mortgage News Daily, wrote an article, and we talk about it a lot, and how they're symbiotic, but not necessarily in sync. And what do I mean by that? Well, you've got the Fed rate, right? And you've got the mortgage interest rates. Now, the Fed rate itself is based on how much they charge member banks to borrow money from them on a short-term basis. The mortgage rate is a rate by which you can borrow for 30 years a sum of money at a particular rate. So they're completely different and focused on different things. However, the Fed funds rate always has with it a report or some kind of verbal or written document that comes out and says, this is why we did this. This is our thinking on doing this. And this is why we're doing this and what we're looking at as a reason for doing this. Normally they're talking about inflation, the overall economy, and worldwide or events that affect the U.S. economy. Now, the U.S. economy is complex, but when it's boiled down, it's simply this. How many things you buy each year, how many things you sell each year, is added up by everybody and every company, and that big number is what they call the gross domestic product. And that's a general rule as to what it is. If that number, and it's a huge number, by the way, we're talking trillions and trillions of dollars, right? And I sound like our president, trillions and trillions. So that particular number and how it affects you is because if we have a dip, and what do I mean by a dip? Let's say that 1% of the amount that is spent on a yearly basis is eliminated from the economy. Could trigger a recession. Why? Because you and I depend on you and I to buy and sell things from you and I. That's how it works. It's this constant exchange of goods for money or money for goods or goods for goods that keeps the ball rolling for you and me, Joe Q public, driving around trying to listen to this radio show. We need the economy to maintain a certain level of purchasing and buying and selling in order to make sure that I can pay my rent, i.e. I get paid because I do a job and that job turns into money that in turn pays my rent, my mortgage, in turn I buy groceries and all those people get paid. If it dips by 1%, and let's say we're talking $20 trillion is the U.S. economy. It's less, but let's say it's $20 trillion because it's much better math. Well, 10% of 20 trillion is 2 trillion. So 10% of that is 200 billion.
Yeah.
And if that happens over a course of a month, you take that out of the economy, we're all suffering, and all of a sudden one thing leads to another, and usually in the snowball effect, which is something like the coronavirus. All it took was that coronavirus to hit the U.S. shores, and I believe we're in the double digits now.
6 was the last thing I heard.
Right, I think it was 9 this morning, but I think this panic, the governor of Washington is thinking about closing all the public schools. The mayor of New York is thinking about closing public events to large crowds. Now, these are states where the coronavirus is. Now, a state like California, what say, they end the Los Angeles Marathon tomorrow, Sunday. What happens if they begin to stop going to the ballpark or they end public transportation?
Well, the flow down to the vendors is what is horrible.
Yeah, it's awful.
The direct people that work for the venue.
That's
and
right.
All of the people that have their income offset by, selling stuff outside the stadium,
Right.
Transportation. You
think of that trickle down,
yeah.
and it's not really trickle down at all. It's like a waterfall down. That's why I was saying at a 1% dip in the economy over a month, and that's what this coronavirus has done, really affects how people buy and sell real estate. They were talking about this half-point reduction in order to maintain the bank's abilities to keep enough money on hand to meet the federal requirement of net worth. That's an amazing deal. What it means is that $200 billion, if it's 1%, heck, it could be more. But if that amount of money isn't deposited in the banks, their net worth requirements aren't met. Therefore, they have to go to the short-term window and borrow the money. Borrowing the money from the Fed at a half point less is the Fed's, not the Fed, but the Treasury is the Fed's attempt to be able to offset this coronavirus, which really hasn't hit the U.S. This is the hint of it. So all of the feelings and the mental machinations of what goes on in your life, in the economy overall, the feeling of, oh, things are great, they're getting better, I'm making more money, translates just the opposite, slowing the economy down if we get a scare like the coronavirus, which, unfortunately, is what's happening right now. Now, the Fed is half point. They're thinking maybe in next month of doing another half a point. I don't know. We'll see. So, in this, the fact that we have the lowest interest rates right now at 2.9%, let me see. I'll give you the quick rundown of interest rates just so that you have an idea of how the Fed cut and the lowest interest rates are symbiotic but not necessarily tied to one another. Today, 30-year fixed rate, 3.125% to 3.25%. Get this one, FHA VA, 2.875. We're in the twos. Oh my gosh, this is unheard of. 15-year fixed, my favorite loan, 2.75%. And of course, your 7-year ARMs, about the same to 3%. There are now over 11.1 million people who can save over $300 a month if they do a refi. That is a big number. I'm Jeff Barton, your voice in the mortgage industry. Thanks for listening. We got a great show lined up for next week as well, and we'll see you next time. Thanks.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.